Oh, wow. All right. Welcome, guys. Welcome. MCA Bootcamp Day 3. Got a lot of good stuff. All right, got a lot of good stuff for you guys. Let me get to it. So I'm trying to understand the golden cross and death cross. What time frame are they most effective? Any time frame. Any time frame. So let's recap. So day 1. Oh. You guys can see my screen, yes? Cool. Right, day 1, we were identifying market structure, identifying higher highs, higher lows, lower highs, and lower lows. So pretty much just understanding how to identify a trend, how to find an uptrend, how to find a downtrend. We also talked about consolidation, aka ranging markets, how to identify ranging markets, how to trade ranging markets. All right, that's all stuff that we covered in day 1. And then day 2, we followed it up with understanding, right, the 3 phases in the market cycle that are most important, right, that we see 9 times out of 10, which is the accumulation, manipulation, and distribution phase of the market. All right, so that was day 2. We saw how that also goes in with market structure, right? And we see how patterns are just in all of this. So today, for day 3, I want to talk specifically on the patterns, right? The A's, the V's, the M's and the W's, right? How to spot them, how to trade them. It's fairly simple, right? We did some of it yesterday, right? When you see a V, you obviously know you have a swing low. You wait for your swing high and just fib it out, right? When in doubt, fib it out. So that was one way. So today, I know we didn't have a hard time, but I know some people were asking, how do you find the W's or where are the W's? So today, guys, we're just going to spend, I'd say about the first 10 to 15 minutes just going through a market and just looking for these market patterns, right? Looking for these A's, looking for these V's, looking for the W's and seeing where they coming. Do they come, are they in the ranging market? Are they coming after the breakout? When are we seeing these patterns in the market? So we're just going to look at them, try to identify them, get our eyes trained up a little better to see these patterns. And we'll talk about price action at the same time too, as far as what to look for in that reversal, right? As far as before price makes this V, there is price action going on here that does allow us to see the reversal happen before this whole V takes place. So we're going to talk about some of those today too. So yeah, we're just going to talk about some patterns. We talk about some price action. You guys okay with that? Drop some 3s in the chat if that's okay with you guys. Cool. All right. So let's get into it. I'm going to leave all of this wonderful stuff up just because this is going to be my teaching chart. For teaching purposes, I just want to leave this up here just in case we go back to this for any reason. So we'll just go a little further back into the future. I really don't have to go too much further. We could go right here if we wanted. All right, we'll start right here. I like this. I like this area in the market. Really doesn't matter where we are. All right, so it doesn't matter where we are. We're going to see these patterns everywhere. To start, right, I will say when you are trying to identify where you are in the market, this is where we're going to be using TDA, right? TDA, for those who do not know, is going to be top-down analysis. The reason why we do TDA, top-down analysis, is so that way we can get a complete idea, right? A complete big picture idea of what is really going on. Even if you're an intraday trader, coming to the 1 hour time frame is not going to give you enough information, especially when the chart opens up like this. I don't know how anybody can trade like this. I hope nobody trades like this. I pray nobody trades like this, because you're only seeing one side of one part of the picture, right? If the charts were pictures and you think about the candlesticks, they span over days, months, and years at a time. So to get a really good idea of what the whole picture looks like, you kind of have to take a few steps back, right? And so that's where the TDA comes into play. Now, why I love doing top-down analysis and starting on monthly time frames is because of everything that we're talking about here and these patterns. When you can identify a pattern on a high time frame, 9 times out of 10, when you go to all the lower time frames, you have setups for however long that you're looking at, right? So right now, for example, we're looking at a monthly time frame. Can anybody tell me what pattern do they see forming on this time frame for GJ? This is GBP JPY. GBP JPY. Can anybody tell me what pattern we see forming on the monthly chart? Right? A W. So when you see a W in the market, what type of trend, right, are we expecting? When you see a W in the market, what type of trend are we expecting? Excuse me. Right, an uptrend. Exactly, we're expecting bullish pressure. So when you can come to a monthly time frame, right? Excuse me. When you can come to a monthly time frame and identify this pattern, it literally makes it easy to do everything else on a lower time frame. All right. We see that the market has made this W. All right. So that's what we're looking for. Now, before the market made the W, what type of trend were we in? Before the market created this W, what type of trend were we in? Right? So what does the W indicate for us? What is that showing and telling us? Here we go. A reversal, right? A reversal. Another way we can see this is we also see prices back above the 50, but I'm going to turn this off because right now I'm just training you. This is pure price action, straight price, straight candlesticks, nothing but. We don't need a moving average for what we're doing. All right. So the easiest way to get used to seeing patterns is to go to the larger time frames, all right, and mark them out. Now, do you guys see the pattern within the pattern? Does anybody else see the other pattern within the pattern? And if so, what do we see? All right. I think I made that one a little too hard for you. It was just this W. All right. Wasn't anything special. It was just a smaller W. Inverted wedge. Yeah, you guys could. So, okay, hear me out. I hear where you guys are going with those patterns, and I'm going to tell you, you're making it a little too hard for yourself, right? Yes, there's wedges and all that stuff, but at the end of the day, what's the big picture, right? Just go with the biggest pattern. There will be diamonds and pennants and bullish flags within all of that stuff. But if you don't even know that it's a W, that bullish flag still won't do you any justice. You'll be scared to pull the trigger, right? As far as spotting reversals, A's, V's, W's, and M's. That's what our focus is right now, right? We're trying to identify reversal patterns. And wedges are not reversal patterns, they're continuation patterns. But that's for another day. All right, we got a whole nother week of boot camp. All right, we got a whole nother week of boot camp. Right now, we are in the reversal pattern section of boot camp. So I don't want us to get confused. All right, so this is honestly just how we spot the patterns in the market, right? W's are double bottoms, M's are double tops, just different ways to call it. All right, but when we see these in the market, we have to take them for what they are, and that is the sign that the market wants to change direction. All right, so now that we've done our monthly top-down analysis, you come to your daily time frame. All right, and we see that the daily time frame is trending, but what do we also see? Where are we in the market cycle for this chart? Where are we? Come here, John. Bottom of a channel. We can say that. Distribution. We can say that too. All right. What I see is consolidation. Right? We are in the accumulation phase of the market. Why? What is the market doing majority? Right? It's creating higher highs and creating higher lows. I mean, equal highs and equal lows. I'm sorry. Oh, yeah. You see that too? Right? The market is creating equal highs and equal lows. We see this, right? Majority of the market is staying in one area, prices respecting the low. Right? So from here, right, we're just going to wait for the market to break out. But we know now how to anticipate the breakout because we've already done our top-down analysis. And what was the trend of the market on a monthly time frame? All right, it was bullish. So that lets us know that any other time frame, right, we are waiting for bullish moves. All right, we're waiting for bullish moves. Hold on 1 second, because I had a note here. You're silly. All right. Now, the cool thing about being at this part in the market cycle, we actually have a strategy for this, right? I would probably trade the trap with this, knowing absolutely that we're looking for a breakout, right? But again, if we're not using moving averages and we're just coming to try and trade pure price action, right? I'm going to talk to you guys about some price action that is very key to pay attention to. Can anybody tell me what are these candlesticks called in the market? All right, what do we know them as? Yeah, you're funny, Glow, right? Star patterns, right? And let me see, where is that right here? All right, morning stars, evening stars, right? Dojis, pretty much. Morning star, evening stars for me, I have always considered them dojis. Hanging mans, I will consider the doji. Because the science behind them is the same, right? You trade it the same. But yes, right? These little small candlesticks that sometimes people forget about, right, is probably the most important indication when we're talking price action, right? The morning star, evening star, doji candles are showing indecision in the market, right? When you start to see dojis form, right, the very first doji you see form, this is, well, also we know they're considered order blocks too, right? I want you guys to get used to boxing up these order blocks, dojis, morning stars, evening stars, right? Because by doing so, what you are also doing is creating a zone for yourself. All right, you are creating a zone. The very first time you see a doji, box it up, right? All right. Now, there we go, Pat. That's funny. I was just about to ask. Now, what is created, right, at these levels where we get these dojis, where we get these morning stars and evening stars? What gets created? All right, Pat. Pat was early. He was waiting for this. So this was his question, right? Support and resistance. Now, just like I'm showing you guys, right, evening stars, there's morning stars in this market as well. So when this is, how do I want to explain this? This is another way to trade through accumulation as well, right? But it's also just price action, right? Today, we're just talking price action. You doing Dad's hair? We got a personal hairdresser this morning, guys. Sorry. Thank you. Thank you. You got Dad looking all nice and handsome. All right. Now, in this area as well, right, where this doji is, are what? What is, remember when we were on GU, right, we were at the low of the market. What's below the lowest point, right? What do we have? If somebody's going to enter the market here, what's down here? Orders, right? Stop losses. Exactly, right? Yeah. Right, sorry about that, guys. Right, we've got orders. So why we box up this zone is because we know if price wants to close below this box, then it's going to come for the rest of these orders here. If price wants to respect this zone, right, then it's going to stay above. What do you call it, Glow? A point of interest, right? A point of interest area, right? Demand, supply, and demand. But what is the common denominator? What do we know is in these supply and demand zones, in these liquidity zones? What has to be present, right? What has to be present? I may be asking that question in a weird way. What candlestick patterns are we looking for to identify liquidity zones? That's the better question. What candlestick patterns are we looking for to identify our liquidity zones? There we go, right? Unsure. That's a great quote. Hey, that's the honest answer right there. What? Thank you for saying unsure. Right. You're looking for engulfing candles. Right. Because engulfing candles and order blocks kind of go hand in hand. Why do I say that? This is the engulfing candle here, right? Some people would consider this candle the order block. Just the way that it's just the way that people see it, right? But what you have to have present 9 times out of 10 is a bullish engulfing candle. And an engulfing candle is an order block, right? So just know if you're trying to identify a liquidity zone, if you're having trouble, ask yourself, am I seeing multiple engulfing candles, right? Do I see more than one engulfing candle? Can you have an order block without an engulfing? Yes, you can. An order block without an engulfing candle would be this situation here. It would be a hanging man. And so that's why we're talking about this liquidity zone, because there will be different candlestick patterns in the liquidity zone. Right. So the hanging man is another type of reversal pattern candlestick wise that we want to identify. And really all it is it would be what you would think is a doji, just has more wick to the downside or the upside. All right, this would be a bullish hanging man. And this would be, let me see, there's not bearish ones, but there is, so even this candlestick pattern here, the hammer, all right, the hammer is also another type of candlestick pattern. Let me actually pull that up. Pull that up. Let me, where is it? Because I want us to see them. So they're in the resources section. Yeah. Let's see, let me pull this up. Because I want you guys to see it clearly. But this, we do need to be in our big book of patterns. Let me see if I can get it real quick. If I can, I will. If I can't, I'm gonna keep going because I don't want to throw up where we are. Man, let me see. Yeah, Delvani and Globin setting you guys up for success. Here we go. All right, we've got bearish candlestick patterns. We've got bullish candlestick patterns. All right, so here's the hammer. All right, here's the hammer. What it's showing, right? The cool thing about when you're looking at candlesticks, right? Everything about this formation is telling us something. Everything about every candle is telling us something, right? When we're looking for the hammer specifically, what you are looking for, and this is for I'm talking bullish reversal pattern right now. We're talking bullish specifically. You want to see, right? Candlesticks start showing exhaustion. Right? When you see candlesticks and they're coming, they just got flat bottoms, flat tops, that means they're gonna fall. They're falling. But when you start to see price give you wick, right? It's showing that price momentum is slowing down. What the hammer is confirming is, right? This is just an analogy that I'm gonna give you, right? The hammer, right, is smashing the nail in and then going about its business. That's it. It's just driving the nail home and then going to continue going on its work, right? This is what you need to see, though. You want to see that long wick rejection, right? Same thing with the shooting star, right? You want to see those long wick rejections. These wick rejections are very key. Now, yesterday, we were talking about how the wicks do not matter when we're talking market structure, right? But however, the wicks do matter when we're talking price action, right? We're on the same page there, yes? Right? When you're talking structure, we don't care about the wicks. We do, but we don't. When we're talking straight price action, we definitely care about the wicks. All right? Just want that to be clear. So when we're looking at the hammer, let me go back to this GJ chart. All right, you want to see exhaustion. And it probably looks better on a lower time frame chart too, right? But all you're wanting to see is these exhaustions, guys. As far as reversals go, you want to see wicks, right? The more wicks you see, the less that price wants to go in that direction. All right. And all of this goes hand in hand with, first you have to identify your liquidity zone. Once you identify whatever order block price is respecting, then you can dissect, right, the accumulation zone like this. All right, then you can dissect the accumulation zone in this way. All right, so we've got our doji patterns, evening stars, right? We've got hammers, bullish engulfing candles. Another way I like to trade consolidation is, let me see, it's too high of a time frame to do it actually. So I was gonna try and show you guys how do I want to explain this? I don't want to confuse you guys. And this is where I kind of took trading to a different level. How do I say this? Because it's more than just these reversal patterns. But I don't want to talk about the bullish flag just yet, right? There's so many patterns within patterns. Hold on, guys. I want to keep this as concise as possible. All right. So yeah, we'll just stick with the order blocks for now. Because there's like, I want you guys to go and get this information first, like the inside bar, right? Inside bar, pin bars, all that kind of stuff. That's all in here. But this, I don't want to use the boot camp to go into like a study hall kind of sense. I want study hall to be where you guys review these patterns, right? So I'm going to give you guys this blueprint and tell you to go study the reversal patterns, the dojis, the shooting stars, the hammers, right? Because I want us to know that we can identify them. So let's just start looking in the market, right? Let's just do that. Let's take time to just go and identify the different types of reversal candlestick patterns. The 4-hour GJ. What about it, Pat? All right, what about it? So, and the other reason too why I need you guys studying these candlestick patterns is because it's these specific candlestick patterns that are present every time we get one of those reversal patterns, right? This is the price action that goes with the reversal pattern. So in this example, let's see if I can get it. It's messing up. Sorry, 1 second. All right, Discord wanted to just glitch out on me. All good. So we are going to now dissect these candlestick formations. Does anybody see the reversal pattern that is present in the middle of this market? All right, we see the W. Okay, so now let's go and dissect this W. All right, we had a first initial drop that came down to this level. Now, once we see price drop here, what you then want to start looking for is one of your reversal candlestick patterns. All right, one of your reversal candlestick patterns, meaning you want to find, right, if there's a doji, you want to see if there's going to be a hammer, right? You want to see, you know, if there's what's called an inside bar. It's probably my favorite pattern, and we'll talk about that one because that's probably what we'll see the most, right? An inside bar is pure price action. And I've broken it down to you guys before, but I never explained it with this type of terminology. An inside bar is literally when you get a candle, right, that closes inside of the previous wick. All right, it does not break structure, right, and it closes inside, right, the bar. What would we, that's literally why it's called an inside bar. It closes inside of this candlestick. Right. So this is where wicks become important for price action, right? But not support, because really support's there. All right, baseline support is here. But when we're looking to actually enter the market, right, we want to see where is price closing, the price action, right? That's the action of price. Where is it closing? Whenever you see an inside bar close, right? What you can do, this is just how I trade, For me, I would consider this in my head an order block. Why do I already consider this an order block? Because there was bearish pressure, right, that failed to continue. So even just for my head, the way that I think, when I see that the bears failed to complete their orders, there was a block, something blocked it, right? Something stopped it. And that's all I needed to see, right? That's all you need to see, is that price did not want to close below this level. So what I do, when in doubt, fib it out on just the inside bar, right? On just the inside bar. And you wait for price to retrace. And you enter on the retracement. All right, this area would have been our entry. If you wanted to wait, is this on a higher time frame, or doesn't matter what time frame? No, so this price action does not discriminate time frames. Price action is price action. So if you see an inside bar on a 1 minute, 2 minute, 3 minute time frame, you can trust it. It is what it is what it is. That is the one thing I love about trading price action, is that it never changes. Price action will never change. All right. This is definitely an aggressive entry. All right. This is an aggressive entry. Now, the more conservative entry is to wait. All right. Find your inside bar. Would be to wait for a candlestick to close above. Right? Just like how we trade consolidation. I mean, because realistically, let me say this. Wherever you see two engulfing candles, railroad tracks, that's consolidation, right? This on a lower time frame is consolidation. right? That's all it is. On a lower time frame, two engulfing candles right next to each other is consolidation. So knowing that, what do we do when we're waiting to trade our accumulations and we wait for the breakout, right? And again, it just turns into the original trap strategy. If this is our breakout candle, right, we enter on the retracement. Now, Delvani would tell you this is the confirmation of the order block, right? Because it is. Once the candle closes above or below the actual zone, that is all the confirmation you need. All right, so once this candle closes, we enter on the retracement. All right, so this would be also an entry. Now, this is how you get in before the patterns actually show itself. I'm giving you guys the price action that's happening, right? I thought that our order blocks were candles. I thought order blocks were candles of the opposite trend, right? So I was giving you the shams explanation in my head. So again, I was also, how do I explain this? This is an order block, right? The candle opposite of the current trend. This candle is the order block. But we know, right, that price was going to reverse before needing this order block candle, right? And that's what I'm explaining. The inside bar, right, price closing within this already acts as an order block before you get one. All this is telling you, like how, okay, this is how I'm saying this. The inside bar is telling you, hey, the next candle is going to be an order block, guaranteed. That's what it's saying. It's telling you said, but you highlighted two bullish candles. No, I put a box over my zone. I didn't highlight any candles. I put a box over the zone. Two circles, that was an entry. This was an entry. Right. On a lower time frame, right? So I'm on a daily time frame, guys. I'm on a daily time frame. Let me show you. I guess maybe that will help you. I already know in this little area, I guarantee it, there is an engulfing candle. There's an order block. I don't even know what time frame. Let's go 4 hour. All right. There's the order block candle there. All right. There's an order block candle there. There's your engulfing candle. But you can identify all of that without needing to do this. And that's what I'm trying to show you guys. I think they're talking about the bullish setups after the candle here. So if I was able to finish my explanation, it would have made sense. All right, because again, this isn't the highlight of a candle. This is an entry. All right. Simply put, guys, even if this was the order block, like I don't know why that was confusing. I'm trying to figure it out. Even if you wanted to use that candle as the order block, you box up the order block, you wait for price to break out above it. This candle was your breakout candle, all right? But you would have missed everything. So I'm telling you guys how to view a candlestick without needing the whole candlestick to close. This is not, so that's the thing. I think you guys need to understand price action is fluid. Price action is not, price action is constantly going. It's not, oh, wait, let me wait for this. No, price action is happening right now. So I'm not giving you guys something to wait for. I'm showing you guys how to act in the market like live, right? Right when it's happening. Right? Right when it's happening. This inside bar, again, before needing to wait for a whole nother candlestick, is and acts as an order block. That's all I said. I never said it was an order block. I said it acts as an order block. Why does it do that? Because price has failed to close below this zone. So why would I need to wait for another candle when price action is telling me and showing me it's already blocked? Does that make sense? We used to wait on candles to close. This is active trading. Yes, act exactly, Pat. This is not you waiting for candles to close. This is you see this wick. As soon as this candle closes, you buy the market kind of thing. We're not waiting for we're not waiting. You know what I mean? This is like actually real time live. So that's why, no, I'm not waiting for a whole nother candlestick. This is a daily time frame. I can't wait another 24 hours when this 24 hours told me what the next day was going to do. Right? So understanding the anatomy of the candlestick, understanding that the body did not want to close below. So before this candlestick's here, I already know what price is going to do already. Right? Now, if you are somebody who needs to wait for an order block, if that concept, then yeah, then you can wait for this candle. Right? But even then, this wouldn't be enough confirmation, right? This wouldn't be enough confirmation if this is when you saw it. But that's a whole nother conversation. But does that make sense? Does that make sense? You're not always going to get like perfect candles. You know what I mean? The order block's not always going to be perfect. So the inside bar will indicate a reversal. Yes, the inside bar is the reversal pattern. Right? That is the reversal pattern. As soon as price failed to close below here, this is the reversal pattern. All right, let me back this up. I don't need the order block. The order block's not needed. This formation right here is all I need to know. Literally. Price failed to close. This is just price action trading. Like legit, you can take setups like this all day. TP would have been smashed the very next day. Just knowing little things. Literally. Just knowing little things. All right. Price failed to break this low. So I can only anticipate price is going to fail to break this low. So this is where my stop loss is. Literally. Take profit would be the previous high. And in one day, no work, you could literally fall asleep. You made 86 pips. All right. So right, yeah, let's talk about that. You guys know why I have my stop loss here? All right. Because what lies below wicks? What lies within the wick? What's inside of wicks? What's inside of the wick? Orders. Absolutely. So when trading price action, you place your stop loss right outside of the range of the orders. Right? Price action, this is just price action. When looking for a take profit, I can only anticipate that the next batch of orders gets filled. Right? That's my only anticipation. So that's where my take profit is. I go from one batch of orders to the next batch of orders. That's all candlesticks are, guys. They're taking price from one group of orders to the next group of orders. That's why you get so many candlesticks happening, because there's orders everywhere. That's what consolidation is. That's what pullbacks are. Every candlestick is filling an order for somebody. Somebody is trading every candlestick. All right. So knowing that, once I saw this, all right, for me, and this is just like extra, this is just some extra stuff, right? Side notes. Once I see this candle failed to close back above this level, I would need to wait for the next candlestick before I re-entered this market to close back above this level, right? If I miss this entry, if I miss the first entry, right? This candle has now closed above the previous level, right? It's just straight price action right here, guys. Straight price action. You would, when in doubt, fib it out. And we would be looking to enter the market around the 50%. Stop loss at this point would be below the previous level. Take profit is the next batch of orders. Do you guys see that? I can do this all day. Yeah, Daniel, what's up? Any question is welcome. All right, this is why I want, like, it's important to understand the wicks, right? It's important to understand price action and market structure. All right, because now the price action of the last two candles has also given you a pattern. I see a price difference between TradingView and MT4 and MT5. How do I handle that? It's the spread. It's the spread. You gotta realize TradingView is a broker too. Well, not TradingView itself, but the chart you're looking at is a broker's chart. So every broker has a different spread. You gotta trade the chart that is matched with your broker. All right. Price action creates patterns. Patterns create price action. All right. This candle broke above this previous level, right? But failed to break the wick high, right? I would need, this is just confirming re-entries. I would need to see the next candle close above this zone to confirm a continuation. If not, if price failed to break this level, we would see a retracement back to this level. Right? Just structure, price action. That's what we're watching. That's what we're looking at. And there we go. You guys see how both of our setups would have hit TP? Would it be accurate to say that price action happens inside market structure? Well, yeah, of course it has to. Price action has to happen to give you market structure. You can't have one without the other. Glow, you literally took the words out of my mouth. Yeah, you can't have one without the other. You need price action to create structure. If price doesn't move, you have no structure. That would be a dead market, right? So yeah, you guys. But now do you guys understand what I'm telling you? Why price is king, right? Price is really the king in the market. Price tells you everything you need to know. Can inside bar be used as a scalping strategy? Yep. I mean, everything can be used as a scalping strategy. It's just a matter of how you use it. I don't want you guys to think that there's swing strategies and scalping strategies. There's just strategies, and it's just dependent on what time frame you use them on. They said live is so much better than the replays. I've always wanted to learn to trade pure price action. Thank you. If you want to learn to trade pure price action, you're in the right place. That's all I do. That's all I've ever done. It's just trade price action. All right. And this is honestly how Glow and Delvani trade too. So that's why we're doing this boot camp, to slow things down, to show you guys, like, yeah, we got some fire strategies, but the market itself is the most fire strategy. Like the market itself. How can you tell it's just a pullback without an indicator? Just like how I did right now. Price action. Simple as that. Price action. Where is price closing in regards to structure? Right? Fibonacci. That's how you measure pullbacks. All right, so here's the next level. Here's our newest candle. Our newest candle is closing above previous structure. All right. So again, I don't do anything but fib it out. I'm gonna wait to enter at the 62. My stop loss will be the wick low. My TP will be the previous zone for orders. Did price ever come back for us? There we go. Wick entry. We said, but there will be a 50% pullback sooner or later. Yeah, absolutely. And this was, see, but I'm not worried about that 50% pullback because we're steadily measuring every time. Like we're already on top of it. We know where the pullback is going because I'm marking out my candlestick. This was the 50% pullback. You talking about 50% of this move? That doesn't always happen, right? Remember, the market, because we say that it has to give you 50% doesn't mean that it will. Sometimes it'll only give you 23. Sometimes it'll only give you 38. That's why when in doubt, fib it out. That's the only way I can really answer that question because that's just all you have to do is just put a fib on it. Right? That's 3 trades. Pure price action. This was $8 days, 300 pips. Oh no, 10 days. I'm sorry, 10 days, 300 pips. And all we did was just look at price action. Wow, so you just wait every day for a new candle to trade? If you did it this way, yes. Yes. Right? This is why I tell you guys, you do not need to be on the charts all day, every day. There's no point. There's no point. You're over trading. You're honestly over trading. Because if you can catch this whole move at the beginning of the week, you don't need to do all that extra trading in between at all. You don't. You come back to the charts every 3 days and catch 100 pips. Every 3 days, catch 50 pips. Right? Because think about it. This was one entry. One entry, we're currently up 260, 270. All right. I came back another day, had another setup. That's another 200. I'm already up 460 pips. Right. And then we had our third setup. We're up 560 pips, almost 600 pips. And all we did was look for 3 setups. Would I keep going? Absolutely, you could keep going. Right? Absolutely, you could keep going. Now, how do we keep going? What do we do from here? We ask ourselves, where am I in the market cycle? Where am I in market structure? This comes back to what you're talking about, Pat, as far as the 50% goes, right? Has the market shown us anything to indicate that it might be a fight for pressure here. What is present in this market that makes you think twice now? Here we go. Here we go. The red candle. There we go. Doji. Exactly. This candle here makes you think. It would have to make you think. Right. But what we can also look at is look to the left. Where are we as far as market structure? Right. This is previous market structure. Here. All right. Not the wicks. Here. Are we above or below market structure? We're above, right? So that confirms the bullish pressure, right? This close here confirmed bullish pressure. But what I have to give respect is this bearish order block here, right? So now we know, right? One other thing. What other pattern has the market just presented itself? After we caught our 3 setups, what pattern do we now see? A V, right? Exactly. A V. And a V is one leg of a W, right? A V could be one leg of a W. So that's why with price action, you constantly have to be watching. Price action is not something you can set and forget. You kind of have to be paying attention, right? Because what also happens, you now have a swing low and you now have a swing high. It's a lot. Price action, there's a lot that happens in price action. It's a lot to look for. Knowing that we've got this swing low and this swing high. Now, Pat, what did you say about what does the market have to do? It's got to give you back at least what? Right? This is how you trade the range, right? This is how you find the high of the market and the low of the market and understand how to trade in between. If price gives us another 50% retracement of this entire move, right? What pattern would it be setting up for? If price wanted to give us a 50% retracement, what pattern would it be setting up for? A W. So Janelle, you're not completely wrong. Yes, it does also set up the head and shoulders. That's here. But if price were to fall and give us another retracement here, it would be the W that we would get. I mean, I guess you could consider it a head and shoulders depending on, that's the thing too, is patterns inside of patterns are everywhere. Like that's a thing. Right. But for this case, I would be looking for the W, right? More confluence. Exactly. Exactly. It's just extra confluence. It's funny too, because what do we have? I just saw this. What happened here? How did we get here? I want to see if anybody is really seeing how did we get here? And where are we in this market cycle? We talked a little bit about it yesterday. What did we talk about yesterday? What were the 3 phases? And can you see them? Right? Accumulation. Manipulation. And what phase are we currently in right now? Right? So let's see if price gives us the 50%, or let's see if price just continues on the distribution. Now, if price does come back for our level, all right, where are we trying to get in the market? It was, oh, the 50 was here. Because we're in our distribution phase, we're doubling up. So let's just see. All right, price never came back. Oh, barely missed it. Dun, 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 dun. There it is. All right. Those three candles not considered consolidation. These three? You talking about these three candles, Glow? Green, red, green, green, red, green. Yeah, it would. It would be. Oh, right here. Yeah. So what Glow's asking me is, would this be considered consolidation? Yes. However, just knowing how this candle closed on a lower time frame, this is actually going to be a bullish flag. The longer wicks going down means a downtrend. Not necessarily. The longer wicks just mean that price was there at one point. That's all the same. Prices, wicks are like, they're like your trail on a path, right? You know how you leave footprints when you're walking in the sand? It just shows where you came from. That's all a wick is. That's all a wick is. Yeah, Patrick's on this morning. Yeah, Pat. Yeah, Pat. Nah, you understand this. You do. I'm telling you, you do. All right. And so that goes into, right, just understanding like the complete anatomy of the candlestick. So we all know, you know, the body. We know about the open and the close, right? So here's the body of your candle. All right, a bullish candle, the open is at the top. I'm sorry, the open is at the bottom and the close will be at the top. All right, on a bearish candle, your open is at the top and your close is at the bottom. All right, the wicks are just the legs of the candles. That's it. It's just the legs of the candles. It just shows you where they're going and where they have been. All right, so let me fast forward a little bit to where we were. Because price does come back for this entry. All right. Now that price has came back for the entry, we see the W start to form. All right, here's the V. This retracement is setting up for the next leg. All right. Now, does anybody see a candlestick pattern that indicates a reversal? And if so, what do you see? Renee, you are on it. You are on it. Inside bar. All right. Inside bar. We see how price came right back to our 50%. We see price gave us the inside bar rejection. We enter on this wick. Do not let this wick scare you. That's why we did the 50% retracement in the first place, to get an idea of where it is. I thought that was a morning, evening starting. Yeah, this is going to be an inside bar. All right. So now this inside bar is also more confluence for the continuation. And now we have completed our distribution. And the market has given us the W. And that was with no moving averages, straight price action, and we would have went 4 for 4 on our trades. We would have caught over 600 pips because we've got 4 entries. All right. No extra stress. Didn't have to do a whole bunch of stuff. You just wait for price action to show you what it wants to do. For some, price action may be easier because it's less looking for this and looking for that. All right. Price action would it is what it is. Like it won't lie unless it's the US dollar. Then it always lies. And that's why I don't like trading the US dollar, because price action on there is really weird. Right. But 9 times out of 10, price action is all you need. Right. It's all you need. So look, we came exactly to the level I said we were going to come to. Price closed right above that level. So when price closed above that level, it gave us a new zone. When in doubt, fib it out. Let's see if price wants to come give me 50%. Next level would be the completion of the orders. So this is why, if you guys have ever seen me, whenever I'm looking for stop losses and take profit, I always put it at the wicks. I always put it above or below wicks. All right, let's see if price wants to give us this second move. All right, immediate 50% rejection. Immediate 50% rejection. Yep, came to fill that little void that we had here. All right, pulled back again for a second time. Do you guys see how it's just coming to respect retest market structure? You guys understand why it's so important to know how to read market structure now? What do we get? Dojis, engulfing candles. Is that consolidation? This would, yes, you can consider that consolidation. Yes. Yes. I think we just went 5 for 5. I think we just went 5 for 5. I think we just caught, let me see, where was our first entry? Right in here. Over span of 121 days, we just caught 842 pips on 5 setups. 5 setups in 120 days get you 842 pips without even having to look at it. And that was legit. That time we were able to set it and forget it. All right. But that's legit how you read price action. That's how you look for price action within the reversals. right? Those are the candlestick patterns that will be within the reversal patterns, right? We see the 3 phases of the market cycle everywhere we go. We see the 3 phases of the market cycle, right? I don't know. Let's see. Would it keep going? The price closed above? Yep, price closed above. Yeah, we know it's going to happen. It's going to keep going bullish. So yeah, guys, that's really how you would trade price action when it comes to reversals. That's how you identify reversal patterns. You know, that was just the bullish reversal patterns. Still got a whole another week of this, right? Next, then we'll start talking about the bearish reversal patterns and what it will look like. Right? We'll start talking about the wedges. We'll start talking about the pennants, the bullish flags. Right? Yes, Daniel. And then it comes to the mindset to be able to stay in this trade, even knowing price is going to pull back. To stay in this trade, even though price is going to pull back. Just re-enter. I promise you, just re-enter. Did this make sense today? How do we feel after that? How are we feeling after that, guys? All right, we can see it on a lower time frame. We feel good, made sense. Are we confused anywhere? Are we lost? Need to rewatch to solidify the info? Absolutely. Absolutely. Cool. Cool. Do we feel better with the price action? Feel a little bit better? Need to rewatch, Brother Z. Okay, no worries. The inside bar was a bit difficult. Well, I will do it. We'll have a whole day of boot camp just to recap the patterns, right? I won't let you guys leave this 2 weeks without understanding everything that we talked about. That won't happen. That won't happen. But what I know will happen yes. Yeah, Pat, I got you. I got you. I got you. I'm gonna get with you today for sure. What I do know is about to happen is we got some stuff for y'all. Where's Jaren? Where's Glow? Are we having boot camp tomorrow? What's tomorrow? Friday? Let me think about that. But yeah, we got something exciting for you guys. I know we told you guys we're gonna be giving away some NFTs, and we are. That is the thing. We are going to be giving away some NFTs. Let me see. Where's Jaren? Jaren, where you at, bro?
Hey, what up, bro?
Man, how you doing today?
Bro, I'm all right, man. Class was fire today, bro.
Thank you, sir.
I learned something today, man. I appreciate this.
Yeah, and it's funny because I be driving stuff home for myself too. Stuff I forget.
Oh yeah, I appreciate this.
So
How everybody doing though? Everybody good? What's up?
Good. Yeah. Man, drop some sevens in chat, everybody. Yeah, drop some sevens in the chat. It's time to wake up. There we go.
I'm seeing it. Yeah, that's what I like to see, y'all. That's what I like to see. Come on, turn me up.
Mm-hmm.
Cool. So, yesterday, I gotta turn my camera on. So yesterday, I told y'all I would give away an NFT for your participation on Glow and Delvani's class. And let's see. Let me go to my webpage. Hold on.
49ers play tonight. Oh yeah, they do. I need them to lose.
Yeah, we had 16 people in class yesterday outside of educators. And everybody who participated or was even in the classroom, they were put on to my wheel of names. So let me share my screen. All right, can y'all see my screen?
Hey, that's dope.
You know what I'm saying? So I'm going to shuffle this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. So we done shuffle them up pretty good, right? So when I click this button, we're going to get the winner for my NFT. So let's go ahead and get this popping.
Mm-hmm. Hey, this is dope. Ramona,
where you at? I know you.
Hey, Ramona. Let's see. Is Ramona in class? Yeah, she's here, isn't she?
Yeah, I thought I saw her.
Yeah, I thought I saw her too. Yeah, there we go.
Yeah.
Hey, congrats, Ramona.
Congratulations.
Nice. So we'll get you hooked up. What you need to do is message Jaren, right? If you have MetaMask, message him your what NFT? The Holians, right?
Yep, it's a whole
Message him your. You need to have. So I'm gonna help you guys. You need to have the Polygon network added to your MetaMask, and then send him right your wallet address. But we'll get you hooked up with that. Ramona, hit us up. We'll get you plugged in for that. For the other 3 guys, I'm gonna be doing a session for that. Maybe that's what we'll make our session for on Friday. It'll just be like a little Forex and chill, you know, a little Merry Christmas with the team for anybody who wants to come and join. And we'll just do giveaways because I have some other stuff that I'm gonna be giving away for you guys too. For those who pre-ordered the sweaters, I got 2 people we're gonna be getting January free. So I got you guys for that. I did not forget. They said I'm not missing no more classes. Skeeter requested a session on how to buy NFTs. I definitely will be doing that too. So yeah, that's all coming in 2022, guys. We got a lot of stuff that's going to be getting excited for you. So yeah, guys. Ramona hit us up. But yes, Christmas Eve, we will do a little MCA team get together. And we got some giveaways for you guys. I got 3. I got one that's going to be given away. I know Glow's giving one away. Simone's going to give one away. So yeah, it'll be a fun time.
Yeah, Pat, I'm in my truck, man. Like I call this my riding affirmation. Yeah, I affirmed this truck not too long ago. So yeah, I'm just riding around. Oh, I'm sitting in it. I'm at work, so I'm just sitting in my truck right now. So no,
yeah.
no, this a Ram, bro. This a regular truck, Ram 1500. I don't have my CDL.
They thought you was in a big rig.
Oh no, I don't have my CDL. I'm not about that life. I build houses.
Yeah. Oh, where's the Glow? What happened? I thought you were let me see. There you go. Yeah, where's Glow?
My computer don't want to let me be great.
Oh, okay. I was like, I thought I made you a co-host.
But I just want to come in here. Everything that Sham talked about today, guys, look at your Candlestick Bible book. That should be your best friend. That pin bar strategy that he talked about is towards the back of the book. There are several beginner strategies that you guys can use on all different time frames. How do I know that? I read the book. So, and it's uploaded in the Forex tips section in Discord. So guys, go check that out. And we'll continue to talk about this kind of stuff on Study Hall.
Yes, we will, man. Shout out to Glow and Delvani for them study halls, man. For real. So yeah, look, so we won't have Asian session today. Today's Thursday.
Mm-hmm.
Yeah, we won't have Asian session today. We'll do a giveaway. I'll give away an NFT that time. We'll do one there, and then we'll do 2 tomorrow. How's that sound? Yeah, no London either. Yeah, just because right before the Christmas week, we're not gonna see much. So yeah, we won't have London. So today, I'll see you guys at 7 p.m. Eastern Standard Time. We're doing another NFT giveaway. 7 p.m. Eastern Standard Time. We got another giveaway. Yep. Asian session giveaway.
Oh yeah.
Asian session giveaway. I might have to give you something special for that one. What we got to do for that giveaway? For that giveaway, I would like everybody. I would like everybody to write 3 goals for 2022 in the Daily Affirmations channel. I would like everybody to write 3 goals to be eligible for the giveaway Asian session. We'll make an announcement for this. Right? I want you to write 3 goals. Should have that for Monday's class. Oh, because he did that for the lab.
Oh
okay.
yeah. Oh yeah, they should. So this is going together just perfectly, bro. I like how we be bouncing off of each other and we don't even be in the same room.
Yeah, for sure. Yep. So yeah, I need to see him. This is look, I didn't even know this is giving you guys told on yourself. If you didn't do it before, you can get it in now. Right? So get those goals done. 3 goals for 2022. Right? Write those. And I'm looking. I be checking, guys. I got eyes everywhere. I'm always looking. All right, and then we're gonna look, but we're definitely gonna be doing some giveaways, man. We're gonna end the year. I will also name the first person. Everyone's invited. Yeah, everyone's invited. Of course, everyone is invited. Oh, to that call. Yeah. We'll open this one up. We'll open the Asian session one up to everybody. We'll open that one up to everybody. So yeah, I'll see you guys 7 p.m. And then we'll see Christmas Eve. I'll get a time and I'll finalize the time and I'll get that sent out so that way it works for everybody. We're not going to keep you guys too long. It'll be like an hour. It'll be like an hour. Just be fun. We just chop it up, talk some good stuff. And then, yeah. Yeah. I like that. Okay. I like the way the week is ending. I like that. So, yeah, I need to see those 3 goals. We'll see you guys for Asian. And, man, it's gonna be a good way to end the week. That's how we're gonna end it right there. I love you guys. I'm gonna holler at you guys later. I'll see you guys in the group. Yeah, Glenda. Yeah, we'll open it up to the free Telegram too. All right, I'm gonna call at you.